Welcome back to the Rise Report. Now last week I covered TSMC's expansion plans in Phoenix. This week I'm going to fill you in on a big bet that is being made in Dallas, the Texas Stock Exchange. For a long time, New York has gone unrivaled as the epicenter of American public capital markets. The New York Stock Exchange, located on Wall Street in New York City, is the world's largest trading floor and stands unopposed in the US. The only other major stock exchange in America is the NASDAQ stock market. It operates as a fully electronic exchange with no physical trading floor, and it is also headquartered in New York City, firmly cementing New York as the sole home of major stock exchanges in the US. This New York City-based duopoly has resulted in hyper-concentrated control over America's capital markets. A monopoly or duopoly has predictable outcomes. Wall Street controls who is listed and who isn't. They can also charge much higher fees because there is no other option for companies that are looking to go public. New York has entrenched financial, legal, and political entities that impact the amount of red tape, compliance costs, and politically motivated complications such as ESG guidelines. The founders of the Texas Stock Exchange are seeking to break that New York monopoly. They want to give companies another option for listing their stocks and taking their companies public. The vision is to lower fees and red tape, remove politics such as ESG from the equation, and focus on financial performance rather than political or social agendas. The trading floor for the Texas Stock Exchange will be located at the Bank of America Tower in Uptown Dallas, and the first IPOs and full corporate listings are expected to happen in 2027. This exchange is expected to bring thousands of high-level finance professional jobs to Dallas, and that would result in tens of thousands of legal, tech, accounting, consulting, and other supporting jobs in this area. As of April, the exchange had already secured $275 million from major investors such as Charles Schwab, BlackRock, and JP Morgan. Imagine all of the financial companies in New York City that support Wall Street today and the kind of impact they would make in Dallas if a fraction of them moved their headquarters to this more business-friendly, low-tax area. The past few years, Dallas has been experiencing an oversupply of new luxury Class A apartments that started construction when interest rates were substantially lower than they are today. Now, the absorption of those apartments has been very high, and the new supply coming to the market is waning. The demand for luxury Class A apartments is likely to increase even more because of the high-paying jobs that will accompany the growing Texas Stock Exchange. Dallas could potentially move directly from being oversupplied with apartments to being undersupplied, and it takes years to build more units. Developers and major real estate investors are keeping a close eye on this situation. I wanted to bring it to your attention so that you can do some research of your own. Next week, I'm going to focus on the powerful macro forces impacting the economy and real estate. I'm Zach with Rise 48, and I'll see you next week.